Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we have an interesting episode. We're going to be going over something that I've seen some other YouTubers do, and I wanted to give my take on this. We're going to be going over the top 100 most popular stocks in Robinhood, and specifically, I want to break down the top 25 so we have time to fit it all in this video. A lot of these stocks are very popular names. Everybody talks about them. People are constantly buying and selling them, giving their opinions on them. So I wanted to give my take on all these 25 stocks. Of the 25, I know most of them pretty well. There's a couple that I don't know, but for the most part, I got a pretty good idea of what these companies do, what their business models are like, and whether or not they're pretty good investments. So we'll be going over all of those, and then we're going back here to M1 Finance. If you're interested in using M1 Finance, which is the brokerage I use, I do not use Robinhood, make sure to use this link down below. We now have 10 successful referrals. Please be one of the ones that use that referral link so we can each get $10 started on our dividend portfolios, and we can get $10 right there. And those of you that are interested in seeing an update on my portfolio, make sure to stay until the end of the video. We have some stocks that are up massively now, like Discover Financial Services up 72%, and we are doing very well overall in the portfolio. And I did just make another small deposit of $25, and we will be turning on auto invest and auto investing that money in just a minute. So those of you that are interested, we're going to count. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, and 25. So to get started, we see Twitter. So Twitter being the first one on the list, which is kind of interesting, it's above Facebook. But let's look at Twitter. One of the things I don't like about Twitter is that it only has one platform. There's nothing really proprietary about it that stands out about it other than its Twitter platform. It doesn't have any other smaller services that it uses or other brands that people look up to. So like the other one that was just below this was Facebook. Facebook has Instagram, Facebook has WhatsApp, they have so many other platforms. Twitter just has Twitter. And I know this is also a little side note, this isn't anything that's huge, but one thing I'd like to point out, one of the biggest money makers for Twitter is the president. Donald Trump uses Twitter more than any president I've ever seen, more than 90% of regular people. So when he eventually gets out of office, whether that's the next term or whether that's this coming year, when he leaves, that's definitely going to hurt Twitter's business model, as people are not going to Twitter to go look at his tweets every day and laugh. Next up, we have AMD. I have friends of mine that are very, very, very hyped up about AMD. They love the business. They love the very high growth aspects about it. And I know one of the CEOs of AMD is a very popular CEO, and you can see the performance over the last 5 years. Jesus, 2,247% and changing. I know the CEO is very popular, Lisa Su, and I think that this company has a very high growth aspect to it. One of the reasons why I don't own it is because my number one holding in my portfolio, as you can see, is Broadcom. They are a direct competitor to a company like AMD, and I don't want to be so exposed to semiconductor companies. AMD is not a bad company whatsoever. I love their business model. The one thing I don't like is that they don't pay a dividend, so for me, that already cuts them out. And then there's some other things about valuations that I don't like about it. I think it's a little overvalued, but I would totally be in support of those who wanted to buy AMD stock. Next one, this is the first ugly one of the group. The next one that we have, the third one, is Chronos Group. Chronos is a disgusting, horrible business model when you compare it to all of the other weed companies out there. So many of the other weed players out there are big money losers, and Chronos is no exception. Chronos loses tons of money. They are a very speculative play. I know the weed section in general, that whole sector is so competitive that hardly any of these companies can make money because there is nothing proprietary about them. So the thing about the weed companies is that the longer that we get into this industry and the more developed it gets, the more commoditized the marijuana industry gets. Because when you talk about, okay, gasoline, for example, if you fill up on gasoline, it doesn't matter if you fill up at 7-Eleven or if you fill up at Shell. They're both gas. They're both going to run your vehicle the exact same. The only thing that is different about the two is maybe the price. Maybe one is charging a little bit more, a little bit less than the other. The same thing goes for these Chronos groups. There's nothing proprietary about Chronos versus a Canopy Growth Corporation or a Tilray. So these are going to be a long money losers for a long time, and I think until we see legalization in the States, I don't think that this is an investment that's even worth taking a look at. Stay away from it. And speaking of money losers, Uber is one of the biggest money losers out there. I know when they first went public in 2019, I know they calculated what Uber lost on a dollar per hour standpoint. They took them the dollar amount that they lost and then factor it into an hourly wage, and they lost, I think it was something crazy like $100,000 an hour. The amount of money that Uber is losing is massive. Now, I will say, speaking of that growth, massive. Massive is the huge opportunity there. That's the word to use when you talk about the potential for the stock. It is massive between Uber Freight, between Uber Eats, the Uber ride sharing. I know they're potentially talking about buying out Grubhub. I know that this is the most dominant company in ride sharing and probably going to be the most dominant company in food delivery businesses as well. So we'll see with Uber there. I wouldn't necessarily recommend that. They obviously don't pay a dividend because they're unprofitable. So not that's something that I would recommend, but not a bad buy either. Royal Caribbean, the same thing as another one that I see that's on this list. Carnival Cruise Line, Royal Caribbean. Of the three main cruise line stocks, you have Carnival, Royal Caribbean, and then you also have Norwegian Cruise Line. Of the three that I just named, the second biggest player is Royal Caribbean. So I think if you're going to invest in a time like now when the hospitality sector is struggling, you want to invest in Carnival. I know all three of these are very sketchy and very risky plays right now, but I think if you're going to invest in any of them, financially speaking, Carnival is the most dominant, the most well positioned to get through this recession. Norwegian Cruise Lines is by far the worst out of the three. They do not have a lot of cash. They do not have nearly as many assets. So I would probably stay away from Royal Caribbean. The next stock is one that is very popular, not among Robinhood users, but among M1 Finance users, investors in general. It is highly talked about. It is in the headlines every single day. Tesla. Tesla is such an amazing company. I mentioned this before, so I won't really break this down. If you want to go to some of my previous videos where I broke down Tesla about growth investing versus dividend investing, Tesla is a company that I do plan on owning one day. I just want to see the share price go back down. It is the only stock in my portfolio that I've actually considered adding that is not a dividend stock. I love Tesla, and I think they have a very, very bright, dominant future ahead of them, and that should absolutely be one of the top stocks on this list. Canopy Growth, I just mentioned the same thing with Chronos Group. If you're going to invest in the marijuana sector, you want to invest in Canopy Growth. They're the most dominant, they're a most financially healthy company, and I think this is by far the best play when it comes to the marijuana sector if you're going to invest in it. Not that I would recommend investing in it, but if you're going to do it, this is the one. Inovio is not one that I'm too familiar with, so I'd like to leave my opinion out of that one. I'm not too familiar with their company a whole lot. I do know the name, and I am familiar a little bit about what they do, but I can't give an opinion on it. United Airlines. So the same thing when we talk about the cruise line sector. The airlines have been absolutely hammered. I made a video recently about Warren Buffett selling all of his airline position, and I think with all of the positions, I think American Airlines is probably the worst, speaking financially. I think that they will probably be the ones who go bankrupt if anyone were to go bankrupt. But of the airline sector, I think it's best to just stay away from it. It's too risky. Dividends are pretty much going out the window for all of these companies, and right now they're just looking to stay alive. So United Airlines is probably not a play that I'd look at holding into there. The one thing that I will give towards these airline companies as a benefit is that they are a need-based product. People need to fly. People are not going to stop flying. Once this coronavirus is over, people are going to continue to fly for business, for leisure, whatever. So airlines are a need-based product, a need-based service. So that is a benefit there. And then next we have Snap. So in the same way I see Snap, the same way I think about Twitter. Snap only has Snap. If people stopped using Snapchat, which I'm sure eventually they will, this company is going to be utterly worthless. Eventually, people are going to find a new platform. People are spending more time on like TikTok is a very high growth platform that people are using. I think Snap is eventually going to die off. I know they try to do little things here and there, like they recently added Snapchat ads to try to increase revenue, and they've been monetizing that more and more. But I don't think Snap is one that you should really focus on as an investment. Obviously, no dividend or anything like that, so I would stay away from Snap. Plug Power, I've heard of. It's a very speculative stock. I don't really know a whole lot about it. I know they're very unprofitable, and I wouldn't mess with that. Bank of America is a very popular stock among the banking sector and one of the most popular of Warren Buffett's. I believe it's actually his biggest bank holding. And Bank of America is a very safe, solid dividend company, and not to mention just a solid business model as well. The banks are always going to do fine. Banks are always going to be profitable, and I would have no problem with investing in Bank of America. I think that's a great pick. Norwegian Cruise Lines, I talked about that one just a minute ago. If you're going to invest in the three cruise lines, Do not invest in this one. This is the worst off. It's the smallest. It has the least financial power. I wouldn't mess with Norwegian Cruise Lines if you're going to invest in any of the three. Fitbit is a stock that shouldn't even really be on here because I know Google recently just announced that they were buying them out. That's why this has traded pretty much sideways for the last couple of months now. So this is not even one that's worth mentioning. Google just bought out Fitbit. So next we have Apple, which I know they're really close right now. I think their market cap just surpassed Microsoft maybe today, actually. Apple is the #1 company in the world based on market cap. They're just below their all-time high, literally by just a couple dollars. So you can see here, what's their 52-week high? The 52-week high is 327. So yeah, you're looking at $7 off from your 52-week high, even in the worst of recessions. This stock is almost guaranteed to go up in the long term always because they have huge share buybacks, they have huge investor interest, they have massive amounts of recurring revenues from people buying new phones and then continue to using those services like Apple Music and stuff like that. They have new things such as their credit cards, and they have so many other aspects of their business that are high growth, amazing areas. This is one of my holdings. Apple is definitely not a stock that you should shy away from. I believe it's actually the #1 stock that's most popular among millennials, so that is a stock that is very safe and stable there. And speaking of the largest companies in the world, we're going to look at the second largest company in the world, another large holding of mine, a very safe, stable tech company, long-term growth, huge share buybacks, has high growth with Azure and their cloud platforms. This is a company that is very safe, very stable. I know they have a lot of different investments in a lot of other high growth sectors like AI and like esports, and I think Microsoft is going to continue to grow in the long term. Carnival, I just mentioned, if you're going to invest in the three cruise lines, Carnival is the one you want to go with. They're by far the most dominant, the biggest players, and they are by far the most financially healthy. I know when it comes to just cruises being booked in general. 49%, so almost exactly half, 49% of all cruises worldwide that are booked through Carnival. So if you were randomly to close your eyes and book a cruise, there's about a 50-50 chance that it's going to be Carnival. That shows how much of the huge amount of market share that they have. So Carnival is the one you want to mess with there if you're going to invest in the cruise line sector. Aurora Cannabis, same story. Canopy Growth is the one you want to invest in. Don't mess with marijuana unless you're messing with Canopy Growth. That is the stock that you want to mess with. GoPro. GoPro reminds me a lot like a Fitbit, where it just went from a hero to a zero in no time. First of all, 91.3% downturn in the stock price in 5 years. 5 years ago, this was a $63 stock. Now it's under $5. I know if you go back to 2020, earlier in 2020 here in March 16th, they were under $2 at one point. A $2 stock from 63. Before I even tell you anything about this company, does that sound like a company you want to invest in? One that goes from $63 a share down to 2? That is not a company you want to mess with. Obviously no dividend, huge money loser. The management has done some horrible decisions and ruined this company. This is not a company that you want to mess with at all. I don't know why it's even on the list. This should not even be in the top 100, especially not the top 25. So stay away from GoPro. The same thing goes with these two names here, American Airlines and Delta Airlines. These are two companies that I just mentioned. The same thing with the airlines. If there's one company that you do not want to mess with when it comes to the airlines, it's this one. It's American Airlines. The financials are horrible. If you just do me a favor and you go and you look at the balance sheet of American Airlines, it's ugly. It's god awful. American Airlines is not the one you want to mess with. And I know all these companies are getting hitting very hard right now. I know just these two alone, you can see American is down 4.5% and Delta is down 3%. They've pretty much just been in a straight line down. I'm curious, what is American Airlines down on the year? American is down 60.83% on the year, and that's even after a little rise. At one point, they were down about 67%. This is not a stock that you want to mess with at all, so stay away from it. Do not invest in it. I don't even know what's on the top of the list. And now we're up to our top three. The number 3 in the list is Disney. I do agree that this is a very popular, very safe, stable stock. They did just cut their dividend, and I do not really like them as a dividend play. That's why I didn't invest in them before they cut their dividend. They have held up pretty well in this recession, and I think in the long term, as far as share price gains go, I think this is a very safe, stable investment, and I have no doubts for anyone that invests in Disney. I know their Disney Plus service is absolutely skyrocketing with the shutdown taking place, so Disney is not a bad play there. If you're interested in investing in Disney, make sure to go ahead and buy it. And then the last two, we have General Electric. I'm not sure why people are so invested in General Electric. I think that it's very fishy. I know actually, sadly enough, their CEO, their ex-CEO, who was the one that took this company from from zero back to a hero, the opposite of GoPro. Their CEO recently just passed, and I know just 5 years ago this stock at one point was a $33 stock, and now you're looking at $7. I know they've cut their dividend to almost nothing. I know they've cut it like over 90%. So GE is not a company that I'd really focus on. There are so many other better companies. Not that it's a bad investment. I think now all of the pain is pretty much priced in, so I don't think it's a horrible investment to buy it. But I think there's just so many other better areas that you can put your money in, and GE is not the main focus here. And then last but not least, we have the number one on the list. The number one on the list is Ford. Why in God's name is the number one on the list Ford? Now, I know a lot of people will say when you sign up for Robinhood, you get a free stock. Now, with M1 Finance, like I said, when you sign up through M1 Finance, you get a free $10. When you sign up for M1 Finance, you just get a straight $10 cash. You don't get any kind of free stock like Robinhood. You get a referral link, and that gives you a free share of stock. And a lot of times, a lot of people have told me that they get shares of Ford. I believe in one of my referrals on Robinhood, I actually believe I did get a free share of Ford. But I think that's a lot of reason why this is so high up on the list. I hope that I'm wrong. And Ford, I have mentioned this so many times in videos. Ford, financially speaking, is a horrible company. That dividend yield is actually zero. They just cut their dividend. It has not been updated yet. They're down 60.3% on the year. I broke down the financials, the business, the balance sheet of this company. It's just so ugly. The growth is non-existent. It's negative growth. The management is making horrible decisions. They're not invested in electric vehicles the way that they should be. A lot of their vehicles are money losers outside of the Mustang and F-150. If it wasn't for those two vehicles, this company is probably looking at bankruptcy. They have horrible debt, hardly any cash, and they had to cut their dividend just to stay alive. So who knows if this recession will be the one that take them down. And that is the top 25 stocks on Robinhood. So I hope you guys enjoy. Let me know down below what you thought about these top 25 stocks in Robinhood. There's definitely some good names in here, but there's a lot of bad. It's a lot more risky plays than I'd like to see, and I know people like to gamble rather than invest. So that's my opinion on that. And then let's give a breakdown on my portfolio, a quick update before we end the video. Right now, we did just hit a new all-time high in the portfolio. We are now up to $2,311. The morning trading is in progress. I'm going to update that and hit auto invest for tomorrow. And then so far, some of my top holdings are still doing very good. And then the top gainers in the portfolio, we're up 73% on Discover, 54 on Whirlpool, 39 on Home Depot, and we now have no stocks in the red. We are in the green on all 30 stocks. And then the biggest losers, I guess you could say, Procter & Gamble, we're only up 1.4, 1.6 on Verizon, and then 1.7 on my new position, Starbucks. So overall, the portfolio is doing very good. In total, we are up 18.22%, $309.90 from gain, $296 from market gain, $13.29 from earned dividends, and on the day, we are up just a teeny tiny bit, about $1.53, or about 0.07%. So in the next video, I will be giving a full breakdown on what my stocks are and an update on my portfolio or any potential changes I'm making. I'm giving my monthly update at the beginning of the month there. So we'll be giving this Monday. And those of you that are interested, make sure to use this link in my portfolio. It is in the links in the description of all of my videos. You can use this link and get a free $10 and be one of the awesome 10 people that use this link. So thank you guys so much for watching. Leave a comment down below what you thought about the video, what you thought about the top 25 stocks, or any questions you might have about my portfolio. Make sure to like, subscribe, and comment, and I'll see you guys next time.